There are certain problems where cash price of the asset will not be given. So directly they will give the installment amount. First we have to calculate the cash price. They have given installment amount here. You have to be careful. 1 lakh is not the cash price here. Add down payment which is already paid on the delivery of that particular asset. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are in the 7th session of Unit 2 of the subject Financial Accounting 1 and this is for first sem BCom student. So your Unit 2 is all about accounting for hire purchase system. So already we have discussed few of the concepts. So let us quickly recall what we have discussed in a previous session. Problem on hire purchase system where cash price of the asset is not given. So whereas in earlier problem they used to give the cash price and we were dividing that cash price into equal installment. But there are certain problem where cash price of the asset will not be given. So directly they will give the installment amount. First we have to calculate the cash price. Why? Because in order to calculate the depreciation as well as in order to know what is the actual cash price of the asset. So in today's session we shall continue with one more problem relating to, that is problem where cash price of the asset is not given, and today we are going to prepare ledger accounts in the books of hire seller. Now go through the problem here. Mr. D. Bhavit, BE, mechanical engineer, decided to start a workshop under self-employment scheme. So we don't need this information. So they have just given the information that Mr. D. Bhavit is a mechanical engineer and he is going to start a self-employment. He purchased on 1198 machines on hire purchase system. So here he has purchased a machine on which date? On 1198. So I have told you, so during this hire purchase even the date is very important. On hire purchase system from Super Machine Limited. Now who is a hire purchaser? Hire purchaser is Mr. D. Bhavit. Who is a hire seller here? Hire seller is Super Machine Limited. Now we know who is a hire purchaser, who is a hire seller, on which date he has purchased the machine. So the asset here is what? Machine. The total payment was rupees 1 lakh. So they have directly given the total payment which is made by Mr. Bhavit is how much? 1 lakh, and the payment was to be made as under. So the total payment to be made by Mr. Bhavit is rupees 1 lakh. Okay. So on signing the agreement on 1198, that is on the date he has purchased that machine, he paid rupees 16,000. So what is this? This is down payment. Now on the date or on the signing of that agreement, so he has given how much? Rupees 16,000 as down payment. Next, at the end of 98, that is end of that current financial year, he has paid rupees 27,000, and at the end of 1999, he has paid rupees 35,000, and the end of 2000, he has paid rupees 22,000. So here the total amount they have given, it has to be paid how much? Rupees 1 lakh. Down payment he has made 16,000 and in respective years he has paid 27,000, 35,000 and 22,000. Now if you add all these, that is how much is the down payment? 16,000. So if you add all these, 16,000 plus first year he has paid 27,000 and the next year he has paid 35,000 and the next year he has paid 22,000. So if you add all these, you will get how much? 1 lakh. That is the total payment which is made by the hire purchaser to hire seller. Interest was charged by the vendor, that is who? Seller company at 10% per annum. So what is the rate of interest? 10% per annum on the unpaid balance. So on the unpaid balance, he has charged interest. That is, leaving this 16,000 for all these amount, he has charged interest. Because what is installment? Installment is equal to interest plus principal. right? So interest plus principal. So this amount includes interest also. Interest of how much? 10%. Ascertain the cash price of the machine and prepare necessary ledger accounts in the books of hire seller. So they have not directly given the cash price. Now whether this 1 lakh is cash price? No, this is the amount that has to be paid by the hire purchaser to hire seller. So this is not cash price. It includes interest also. How much percent interest? 10% interest. Now, how to calculate cash price? First, we have to calculate cash price. So, in a previous session, I have told you, so how to calculate cash price? We have to go from downwards. That is, first we have to take last installment, next second installment, next first installment. Clear? Now, go through the working note here. That is, calculation of cash price. Calculation of cash price. So, we have to calculate cash price of that asset. They have given installment amount here. You have to be careful. 1 lakh is not the cash price. So, the total payment to be made along with interest is 1 lakh. But we have to calculate the cash price of the asset. Now, go through the third installment first. So, what is the third installment? 22,000. So, third installment is 22,000 less interest. So, less interest. Now, how to calculate? So, this 22,000 is what? It's along with interest, right? So, what did I tell? Installment is equal to principal plus interest. Right, so this is a formula for installment. In the sense, this installment includes principal amount plus interest. Right, so the remaining amount to be paid by the hire purchaser, so it should be in the form of installment. So it includes interest also. Now here they have directly given installment. How much? 22,000 in the third installment. Now what is a principal? So we don't know the principal, but we don't know the interest. But they have given, so what is the percentage of interest? 10%. So let us assume principal is 100. Clear? So principal is 100, interest is 10, and they have given installment amount, that is how much? 110. So when you add principal plus interest, so we'll get installment amount. So this is 100 plus 10. So now what is our installment? That is 110%, right? So for 22,000, so here they have given third year installment. So for 22,000 it is 100%. Then we have to calculate interest. So interest is how much? 10%. So interest is how much? Cross multiply. That is 22,000 into 10 divided by 110. So how to cross multiply? 22,000 into 10 divided by 110. So this is how you are going to calculate the interest if they have given directly installment amount. So calculate 22,000 into 10 divided by 110. So it is 2,000. Clear? Now 22,000 minus 2,000. So we'll get 20,000. Now add second installment for that. Now we are done with third installment. First what we have to take? We have to take the third installment less interest. For that we have to include this 110 also. It is not 100%, it is 110. Why? It is inclusive of interest, right? So 22,000 into 10 divided by 110. So I'll get 2,000. So deduct that, we will get 20,000. Now add second installment. So what is the second installment? 35,000. So add second installment 35,000. So I'll get 55,000. Okay. Now less interest. So how to calculate interest? You have to calculate on this amount. That is 55,000 into 10 divided by 110. So you'll get 5,000. So the total amount is how much? 50,000. Now add first installment. So what is the first installment? 27,000. So when you add 27,000, you'll get 77,000. Now less interest. You have to calculate interest on this amount. 77,000 into 10 divided by 100. So you'll get 7,000. So the total amount is 70,000. Now what is the amount payable? That is 70,000. For that, add down payment which is already paid on the delivery of that particular asset. So what was the down payment? So they have directly given. So on the date of delivery, they have given 16,000 as down payment. So add down payment, so you'll get total cash price of the asset. Now what you have to do? Come with the third installment, less interest, add second installment, less interest. Next, add first installment, less interest, you will get the total amount payable. Now 70,000 is the total amount payable. For that, add down payment 16,000, so you'll get the total cash price of the asset is how much? 86,000. Now clear about this? Yes. Now whether we have to calculate depreciation here? No. Why? Because we are going to prepare ledger accounts in the books of hire seller. So seller is not having that asset, so no need to calculate depreciation in this problem. Clear? If we are going to prepare ledger accounts in the books of hire purchaser, then we have to calculate the depreciation. Now we shall directly move on to the preparation of ledger accounts in the books of hire seller. Now who is a hire seller here? So hire seller is Super Machine. So it is not Vijay Motors, it is Super Machine. So hire seller is Super Machine. So we are going to prepare ledger accounts in the books of hire seller, that is Super Machine. So the first account to be prepared is that of hire purchaser. So in the books of hire seller, we are going to prepare accounts of hire purchaser. Clear? Now what we have to do here? So since we are preparing journal entries in the books of hire seller, so first account to be prepared is hire purchaser's account. Now what are the journal entries we have to record in the books of hire seller? So first one is for selling of asset, next receiving of down payment, and the third one is interest due, fourth one is what? Installment receipt, and the fifth one is for transferring interest to profit and loss account. So here we are not having depreciation since the asset is not there in the hands of hire seller. Now what you are going to do? So your first entry is for what? Selling of assets. So what is the entry? Hire purchaser account data to asset account. Now what is the asset here? Machine, right? So on 1/1/98. So first what the seller is going to do? He will sell the asset. Next, he will receive the down payment. First, we shall record entry for selling of asset. So, what is the entry? Mr. D. Bhavit's account data to machine account, that is to asset account. Now, what is the cash price of the asset? We have already calculated. So, write this cash price. Clear? And the second entry is for what? Receiving the down payment. So, how much down payment they have received? 16,000. So, what is the entry? Bank account data to hire seller account. So, bank account data to hire seller account on the date of delivery of the goods 1/1/98 by bank account 16,000. So, the down payment is received how much? 16,000. So, record that amount. Next, third entry is for interest due. So, what is the entry? Hire purchaser account data to interest account. So, what is the entry? Hire purchaser account data to interest account. So, on the date of, on which date? It is on 31/12/98. That is end of that financial year. So, we have to calculate interest. So, what is the entry? Hire purchaser account, that is Mr. D. Bhavit's account data to interest account. Now, let us see what is the interest due in the first year. So, what is the interest due in the first installment? It is 7,000. Now, record that 7,000. Clear? Now, after that, installment received. So, what is the entry? Bank account data to hire purchaser account. So, what is the entry? On 31/12/98, that is end of the financial year, by bank account. Now, what is the first installment received? What is the amount? That is 27,000. So, record this amount 27,000. Now, as usual, balance both the side. If you add, so in the debit side, you will get 93,000, whereas in credit side, you will get a balancing figure of 50,000. So, this is the balancing figure. Now, what we are going to do with this balancing figure? We have to carry it down for the next year. That is 31/12/98 by balance carried down how much? 50,000. Now, come to the second year. So, the asset is purchased on 98, right? Second year 99. And the third year 2000. So, here the payment is made in 3 installments, right? So we have to prepare accounts only for 3 years. Now come to the second year, that is at the beginning of the year, whatever the amount you have carried down in the previous year, that is end of the year, that has to be brought down in the beginning of next year. That is 1199. To balance brought down. So what the amount you have carried down? 50,000. So bring down the balance 50,000. Next, after first year, so what are the entries to be recorded? So you need not record for selling of asset as well as down payment received. So you have to start recording entry from interest due, installment received as well as interest which has been transferred to profit and loss account. Now we shall start with interest due. So what is the entry? It is hire purchaser account data to interest account. So who is the hire purchaser here? Mr. D. Bhavit's account data to interest account. So on which date? End of the financial year, 31st 12/99 to interest account. How much? 5,000. So how did we get this 5,000? Go through the table. What is the second year interest? It is 5,000. Clear? So record that amount. Next, installment received. Right? So what is the entry? Bank account data to hire purchaser account. That is 31st 12/1999. That is at the end of the financial year by bank account. So your entry will be bank account data to Mr. D. Bhavit's account. So you are receiving, or here the hire seller is receiving the amount, right? So by bank account. Now what is the amount for the second installment? So they have given in the question itself, that is 35,000. So record this 35,000. And next your entry is for transfer of interest to profit and loss account, which doesn't comes in hire purchaser account. Now we are done with this. So calculate both the sides. So in the debit side it is 55,000, whereas in credit side you will get a balancing figure of 20,000. That is 55,000 minus 35,000, you'll get balancing figure 20,000. So at the end of that financial year, you have to carry down that amount. That is 31st 12/1999 by balance carried down how much? 20,000. Now come to the last year, that is 2,000. So whatever the amount you have carried down in the previous year, that is 20,000, you have to bring down that balance in the beginning of current year. So current year is 11/2000. To balance brought down how much? 20,000. Next, your second entry is for what? Or your first entry in the books of hire seller, that is in the third year, is interest due. So what is the entry? Hire purchaser account data to interest account, that is end of the financial year. So what is the end? 31st 12/2000. So to interest account. So your entry will be hire purchaser account data to interest account. So write to interest account. So what is the interest in 2000? That is in third installment. It is 2,000 interest. So record that amount. Now next is what? Installment received. So what is the entry? Bank account data to hire purchaser account, end of the financial year 31st 12/2000 by bank account. So how much? So let's see how much installment they have paid. It is 22,000. So record that 22,000. So at the end of the third year, the total of debit and credit side will be equal. So this is a very simple problem. As I told you, if you know the journal entry and these entries are repetitive in nature, so you can go on recording the amount. So once you know how to calculate the amount, then it's very easy to record all the entries. So you have to know the journal entry, at the same time you have to know the calculation. Other than that, these entries is repetitive in nature. And the second account to be prepared, that is in the books of who is a hire seller. Hire seller is super machine. So your hire seller is super machine. So record entries in the books of hire seller. So let's see who is a hire seller. So hire seller is what? Super Machine Limited. So we have to record entries, or we have to prepare ledger account. So which is the first ledger account we have prepared? That is hire purchaser account. Next we have to prepare interest account. Clear? So how to prepare interest account? So you have two entries here. One is for interest due and transferring that interest to profit and loss account. So what is the entry for interest due? Hire purchaser account data to interest account. So that is on first year, that is 98, 99, 2000. We have to prepare account for 3 years. So on 98, so what is the entry? higher seller account data to interest account. So who is the higher seller? Bhavit, right? By Bhavit's account. So what is the interest for first year? So let us see the interest. So the interest for first year is how much? 7,000. So we have to go from downwards, right? So interest for first year is 7,000. So record that amount 7,000. Now this interest has to be transferred to profit and loss account at the end of the financial year, that is 31st/12/98, to profit and loss account 7,000. So here we have to close this entry. Now in the same way, coming to 99. That is, so first is for interest due. What is the entry? Higher purchaser account data to interest account. Here higher purchaser is Mr. Bhavit. So 31st/12/1999 by Bhavit's account. So what is the amount? Second year interest, that is 5,000. So record this 5,000. Record this 5,000. Now you have to transfer this interest to profit and loss account 31st/12/1999 to profit and loss account. How much? 5,000. Now the total of debit and credit side will be equal. Now come to the next year, that is last year 2000. The entry will remain same. So for interest due, what is the entry? Higher purchaser account data to interest account. Now here higher purchaser is Bhavit. So what is the interest for third year? So third year interest is how much? 2,000. We have already calculated. So record that 2,000. Now coming to the debit side, so this interest has to be transferred to profit and loss account. So 31st/12/2000 to profit and loss account 2,000. Now the total of debit side is equal to total of credit side. So this is how we are going to prepare accounts in the books of higher seller. Here only two accounts you have to prepare. One is higher purchaser as well as one is interest account. You are not going to calculate depreciation account because the asset is not there in the hands of higher seller. So this is a problem where cash price of the asset is not given. So during such situation, we have to come with third installment less interest. So if you see the working note, so we have to start with third installment. So they will give in the question. So in each installment what they have paid. Since they have not given the cash price and they have given the total installment amount to be paid, it means that it is inclusive of interest. So come with the third installment, record the amount less interest, and here you have to be careful. You have to divide it with principal plus interest amount. Clear? So here 10% is interest. So let us assume 100 is principal plus interest. So it is 110. Next, less interest, you'll get the amount. Next, add second installment. So when you add, you'll get 55,000 less interest, that is 5,000. So you will get 50,000. Add first installment. Next, less first installment interest. Then you'll get total amount payable. Then add down payment what the seller has or what the purchaser have paid to the higher seller. Then you will get the cash price of the asset. Here no need to calculate the depreciation because as I told, the asset is not in the hands of higher seller. Next, go on recording the entries. So we have to prepare higher purchaser account as well as interest account. So first year only you will have more entries. So your entry starts from purchasing or in the books of higher seller, right? So for selling of the asset, receiving the down payment. Next, third is for interest due. Next, fourth is for installment receipt. And the fifth one is for transferring interest to profit and loss account. Next, we will prepare interest account. So interest account for interest due and transferring that interest to profit and loss account, where your debit and credit side will be equal in each and every year. So in my next session, I am going to solve a question paper problem on hire purchase system. So this was a question which is asked for 15 marks. Let us solve a problem and we shall wind up this unit. So we shall solve a problem that is 15 marks problem on hire purchase system. So my dear students, hope you have understood the session. I think you are clear with hire purchase system where there are two parties, hire seller as well as hire purchaser, and you have to know how we are going to record entries in the books of hire purchaser as well as hire seller. See you all in my next session with a question paper problem. Till then, take care. Thank you.